The way that we've looked at it is that there's three macro risks that are out there. The first one is the U.S.-China trade war. The second one is Brexit. And the third obviously filters into global growth. So what we're starting to learn right now is as far as U.S.-China trade war goes, it looks like we're moving into a truce. So I view that as a non-negative event so news doesn't get worse.
Non-negative,
Non-negative.
Sure, yeah.
I don't want to say positive yet because
Right.
it's too soon. Brexit, the same thing. It's a non-negative event. So far, early indications look good. Now, global growth is interesting because are we ready to price in the end of the mid-cycle correction? So we've been talking about a slowdown. Does this lead to a recession? Is it a mid-cycle correction? Or is this really the end of the mid-cycle correction? Now, we have a lot of policy support out there,
Right.
whether it's the Fed, whether it's China, fiscal, monetary, all across the board. Does the slowdown in the headwinds from trade allow that stimulus now to gain traction?
So, drum roll, please. You think we're turning a corner here?
I'm thinking it's early days. So,
Okay.
so the way I phrase it is the worst behind us for now?
Okay. Michael, what do you think? I know you're a little bit more cautious about the environment. You still see recession risks out there?
Limited, though. We're seeing the beginnings of the green shoots from all of the easing that's taken place. We've seen U.S. money growth begin to reaccelerate in the last few months, which shows the Fed easing is working. They're not pushing on a string. We're seeing housing recover and stabilize. You don't fall into a recession if housing is stabilizing, so that's a good sign. We've yet to see a real strong, broad-based improvement in leading indicators, though. And for the S&P to really break out and continue to move higher, especially being led with cyclical leadership, you need to see earnings recover, and we haven't yet seen that.
Okay, so when we talk about down 3% overall, it's going to take us a couple weeks to figure out if that turns positive or not. What are you looking for? Is it the third quarter numbers, how they continue to come in for the rest of this season? Or are you saying we're going to need confirmation going out to the fourth quarter and beyond?
Yeah, we're going to need to hear positive guidance. We're going to need to see leading economic indicators of the U.S. economy and global economy continue or begin to improve, which we've really seen a couple data points improve. China's PMIs improved. U.S. PMIs have been mixed at best. Eurozone PMIs have been weak. And so we would need to see a broad-based improvement. We need to see a weaker dollar. We need to see the yield curve steepen. A lot of things need to happen to get earnings revisions higher.